Hello everyone. In this video we are going to start with a new concept called liquidation of companies. So let us understand the meaning of liquidation. Liquidation is the process of winding up a company's affairs and distributing its assets among its stakeholders, including creditors and shareholders. This is the normal meaning of liquidation. Here the company is going to wind up its transactions, accounts, everything. Here the company is closing down its business activities entirely. It is shutting down, so there is no more business activities here. So how the liquidation of a company takes place, how the accounts are settled, all those things we are going to learn in this chapter. So liquidation, nothing but it is also known as winding up, refers to the process of bringing company's operation to an end, selling its assets and distributing the proceeds among its stakeholders. The purpose of liquidation is to resolve the company's financial difficulties, pay off its debts, and keep its operation in an orderly manner. Here, the company will wind up its business operations. It will end its business activities from each and every members of the company, but 99% the company or the management won't try to, or they won't like to close up the companies. They will try to continue the business process, they try to solve the business problems, but in certain unavoidable situations definitely company will close down its operation when it is not able to pay off its debts, or due to some other reasons they will close up the business activities. That is the meaning of liquidation of a company. Here there are two types of liquidation: voluntary liquidation and compulsory liquidation. So voluntary liquidation occurs when a company decides to wind up its affairs voluntarily. Here the company members itself, company directors or CEO and board person itself going to decide that they are going to wind up closing down the business activities. Another case, compulsory liquidation. The initiated by an order from the court when the company is unable to pay its debts and fail to resolve its financial difficulties. In this situation, second point, compulsory liquidation will be initiated by the court when the company is not able to pay off its debts. When a business or businessman or the business is becoming insolvent, that time court will indicate for liquidation. Here the liquidation process takes place by selling all the assets of companies and distributing the amount taken from these sold on assets, isn't it? So this is how the liquidation process takes place. See, there are two types. First one, voluntary liquidation. Second point, compulsory liquidation. Here the company is going to close down entire business activities. Okay, next, for this particular purpose the court will appoint a third person called as liquidator. So a liquidator refers to an officer who is specially appointed to wind up the affairs of the company when the company is closing. So here liquidator is the third party appointed by the court. Why? Because here a court will appoint a third person who is having no connection with the company. Why they are appointing a third person? In order to check the fairness and distribute the amounts very fairly. That person should act for the shareholders as well as for the government and creditors. He should be third person. He don't know about the company itself. He should not know about the company's worth. He is a very fresh minded person. He comes to the company, which company is closing down, that time he is going to recognize, and he is going to calculate the value of assets. He will sell the asset to the another persons. He will receive the amount and he will distribute the amounts to the creditors or debenture holders and other to the shareholders and all. So he is act as a member of government who will act very fairly. He should not be one-sided. Here these liquidators are appointed by the court or central or state government or by the Ministry of Affairs. These are the important terms which we are going to come across in the liquidation of companies. Moreover, here it is a very simple concept. Here the liquidation takes place very simple. We are going to calculate statement of liquidation. In this account, we are going to calculate only receipts and payments of the company. Debit side will be receipts and credit side will be the payments. It should be in an orderly manner. First, we are going to check the assets values and for how much it has been realized. So we are going to write it down all the assets and its realized value. That means that at what price the asset is sold. Payment side we are going to recognize in an orderly manner. First point, we are going to pay for the liquidator salary, that is legal expenses occurred at the time of liquidation. Next, we are going to pay it for the secured creditors. Secured creditors having the top priority for repaying the debts. Next, we are going to pay it for, in these legal expenses, remuneration charges of liquidator is also included. So we have to pay that first. Next point, we have debenture holders. Next we have preferential creditors. Next, unsecured creditors. Preferential creditors, I'll just write it down. Unsecured creditors. Next, in case if a company is having preference shareholders, they will come. Finally, if there is any some amount remained, that will be distributed to the equity shareholders. If there is no amount, equity shareholders will not get anything. So if the amount recognized is 10 lakh in cents, the legal expenses might be 10,000, 5 lakh, 5 lakh. For secured creditors, debenture holders may be 3 lakh, and preferential creditors, that is considered as 90,000. This is just an example, guys. Okay. Next, around 9 lakh. Unsecured creditors 50,000, and remaining 50,000 will go for preferential shareholders, that is balancing figure. Equity shareholders will get nothing. And this is how liquidation statement is going to look. Here there is no further payment for equity shareholders because the company, all asset has been sold. The company is having now zero balance. So equity shareholders are the owners of the company, so they are fully responsible for the loss. So this is how we are going to calculate, and the problem will be very easy. These many things will be there in the format. In question also they will clearly mention about the assets values and liabilities details. So only four columns we are going to have: receipts amount and payments amount. Firstly, we are going to recognize the receipt in the sense the assets value. Based on assets value, we are going to repay the debts. So if we have excess assets realized, that will be paid to the equity shareholders finally. So hope you all understood the theoretical concept of liquidation. So in next video I'll start solving the problems. Hope you all understood this video.